Well, hi everyone, and welcome to the Infinity Futures Daily Trading video. My name is Raleigh White, and I'm here to talk to you about the trades we took in our live trading room on Friday, December 19th, 2014. Well, looking at today's economic calendar, you can see that we had a very light schedule, but there were a couple of things we needed to be aware of. First of all, it was the second day of the all-day European Union Economic Summit meetings. And then we also, since this is the third Friday of the month, it's Options Expiration Friday, but 4 times a year we have a quadruple witching options expiration, which means that we're seeing expirations for stock index futures, stock index options, stock options, and single stock futures. As far as today's pre-market sentiment was concerned, things were somewhat mixed to positive coming into the open. Now, the Asian markets had closed higher on U.S. central bank position. The sentiment was boosted in Asia after the Federal Reserve vowed to be patient in raising its interest rates. The best performing markets in Asia were the Japanese Nikkei, which closed up 2.4% as the weak yen was helping exports, in particularly for Toyota and Nissan. We also saw that the Australian market was up 2.5% on gains in the energy sector. Shanghai was also up 1.7% on an increase in heavy construction sector as a result of government-funded infrastructure projects, and the Kospi market was up 1.7% as well as blue chips were gaining strength, in particularly Samsung and Hyundai Motors. As far as the European markets were concerned, they were open but trending lower after bank sector downgrades. Now, the Italian, Spanish, and Irish banking sectors were under pressure after S&P downgraded the rating of many of the key banks in those countries. But those losses were somewhat offset by the robust market growth that we saw in the U.S. and overnight in the Asian index markets. And we also saw that the German GfK Consumer Climate Indicator rose to a level of 9.0 from 8.7 in the prior month. As far as the United States is concerned, Wall Street did figure to open up higher as the market rally continues. Now, the futures were pointing modestly up coming into the open of today's trading session following the global markets higher on the Fed's pledge to cautiously consider rate hikes. Analysts are hoping for a continued Santa rally, but note that the only thing that could scuttle the progress would be sharp declines in oil prices and further problems with the ruble. Focus for many U.S. investors today would really be on next week's housing reports, GDP data, on what was otherwise going to be a slow day for economic news on this Friday options expiration day. As far as today's trading activity was concerned, I only attempted one entry in the market, and I was filled on that in the crude oil market. But before we look at that trade in any detail, I do need to remind everyone of this following important disclaimer. And that is that trading futures involves substantial risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources, as you may lose all or more of your initial investment. And always remember that past performance is not necessarily indicative of future results. Well, turning to the charts, we're looking here at the point and figure chart for the crude oil market. We had established early on that the level at 56.30 was a minor area of resistance. So as prices were starting to move up into this area, I was actually sitting here with a short entry at 56.30. My profit target was at 56.25, and my stop loss was at 56.40. Now, this was kind of a bizarre entry because as the market started to close in on my entry point, all of a sudden it just suddenly shot up. And I actually had an 8-tick slip on my entry. So now my entry was at 56.38, my stop loss was at 56.48, and my profit target was sitting here at 33. So the market moved, ended up moving about 8 ticks against me. I thought I was actually going to get stopped out, and then it turned around and it actually, went right to my profit target without filling me and suddenly backed up. And the net effect of all that with my trailing stop is I ended up getting out with a 1-tick win on this trade. So I ended up being up $10 on a very bizarre trade. In many ways, I'm actually glad that I got some slippage on this, because had I been filled here, I would have been quickly knocked out for a 10-tick loss. But this violent move, I had an 8-tick slip on my fill. When the market came around, I had a trailing stop in there. When the market moved 4 ticks in my direction, I was trailing the market by 4 ticks. It moved to my profit target, backed up, and I ended up with a one-tick win. So that was the only attempt and fill I had today, and I'm looking forward to seeing what kind of opportunities are going to present themselves next week. Well, looking at next week's economic calendar, you can see that we have a relatively busy week. Now, things get off to a slow start on Monday with the release of the existing home sales. Then on Tuesday, we have a very busy day that begins with core durable goods orders, the final gross domestic product data, durable goods orders. We have the revised University of Michigan consumer sentiment. Then we have new home sales, core personal consumption expenditure price index, and personal spending data coming out. Then on Wednesday, we have unemployment claims, crude oil inventories, and natural gas storage. Thursday, the markets are going to be closed for Christmas holidays, and on Friday, the markets will be open, but there are no scheduled news or events at this point in time. So with that, folks, I'd like to thank you all for watching today's daily video. I wish you a pleasant evening, a wonderful weekend. I look forward to talking to you on Monday. Take care, and good